Good morning, Clifford Bennett, Herston Economics. Well, I was a little bit ahead of the times yesterday. I got it wrong yesterday thinking we were going to have a strong day. Completely underestimated the negative market sentiment that would be engendered by the Chinese having heightened their reserve requirements, but also several organisations, including the government yesterday, saying how disastrous these floods are and the impact they're going to have on the economy will be long-lasting. One thing absolutely put out of your minds, there aren't going to be any interest rate hikes, at least until the second half of the year. There may not be any this year. So regardless of what people are talking about, inflationary pressures and that pressuring the Reserve Bank, that's a load of nonsense. Simply not the case. Reserve Bank can't raise rates. It can't add to the burden that the Australian economy is already experiencing as a result of its previous rate hikes and as a result of inflationary pressures, higher prices, we call them, that will come from the floods. So no rate hikes, no regard for inflationary pressures from the Reserve Bank on this issue whatsoever is to be expected. Now, markets did dip yesterday a little bit. Resource stocks sold down. I thought that was quite humorous. I mean, resource stocks are really about the external sector. They're about global demand, and global demand is picking up all the time. If global demand stayed flat, if we had global GDP flat for the rest of the year, our resource companies would still be reaping it in, okay? And we're going to have higher global demand, higher commodity prices, higher revenue streams for sure for all of our mining companies, and they remain ridiculously undervalued fundamentally. We're going to see, I think, price acceleration in commodities as you have synchronized industrial production across all three continents. It's going to be a very bullish year indeed. Coming back to today, having got it wrong yesterday, coming back to today, I think the Australian dollar's already shown the lead, and that lead is to the upside. In other words, the bearishness that was priced in yesterday was completely misguided, has to be priced out immediately today. We will see the market firmer today, and I think not be a flat market because of no US lead, but actually be a strong market which towards the end of the day has a quite strong close. Now, going into the US tonight, we have to remember that Friday's price action, the last few hours as well as the whole day, but certainly the close in New York on Friday was very strong indeed. We can expect that market to tick up again tonight, so our market really has to preempt that and have, I think, a more significant move to the upside than people are expecting. The Australian dollar back, just hesitating again under parity. This is long-term psychological price acceptance. The Australian dollar is going 102, 103 very quickly. I would say more a matter of days than weeks, so looking for strong upside there. Sterling, we suggested sterling and oil yesterday. Oil consolidating nicely. Sterling even gaining against the euro. Sterling just keeps making new highs. You can't hold that currency back. So we're continuing with our forecast that we made over a week ago now, that sterling and oil were our two favourites. But I've got to say, as the week progresses, a good bounce back in the ASX, SP200 is highly likely and broad-based in all sectors. But sectors to watch are probably the insurance sector, which has got to have a lot of bad news already priced in already. One in that sector, Suncorp, is likely to get good press and is getting good press, but is likely to gain market share in a long-term sense over coming years in terms of how it's been portrayed, at least, in this disaster. So I think insurance stocks get interesting. Of course, the responses aren't quantifiable yet, but insurance stocks are interesting. Retailers have probably had too much bad sentiment thrown at them. They'll be bouncing back. And of course, my long-time favourite, resource stocks to move higher. So despite getting it wrong yesterday, I'll say for the third time, apology for that, I think the market has to price that down move yesterday out straight away and head a lot higher today, and through the week we will be supported by international markets. Have a good day.